Hi, this is Dennis Sullivan, President of Breakthrough Marketing Pros, and welcome to Breakthrough Market Segmentation, 4 easy steps to apply a market segmentation strategy for maximum ROI. Mention the brand name Ford and what immediately comes to mind? How about Starbucks? Walmart? When you think about Ford, most likely you immediately thought built Ford tough trucks. Ford's target market is primarily guys who want to haul stuff. Starbucks is targeting people who are willing to pay a premium for a freshly prepared cup of coffee from a company that is focused on eco-friendly and socially conscious business practices. Walmart is targeting those who want a low price. These are 3 very different target markets. No business is trying to appeal to everyone. It's impossible. For one reason, it's too expensive. Even with a $25 billion advertising budget, Ford cannot try to appeal to everyone. In fact, they're getting out of the car market and targeting its effort on just the truck market and will continue to only build the Mustang going forward. Starbucks isn't trying to appeal to everyone who drinks coffee. Rather, the company is focused on those who want premium coffee and are willing to pay 2 or 3 times more than they would at Dunkin' Donuts, Wawa, Royal Farms, 7-Eleven, or McDonald's. And although Walmart may appear to try to cater to everyone, they are only targeting those who care more about low prices, not those who want the very best quality. Even Amazon, whose mission is to sell everything from A to Z, isn't trying to market to everyone. The company is only focused on those willing to shop and buy online. Will women still buy Ford trucks even if they don't plan to haul stuff? Will some people buy from Starbucks just because it may be more convenient? Will others buy from Walmart because they prefer the selection? Absolutely. But those people are not the target market segments of those brands. Marketing is all about discovering and meeting the wants and needs of your customers. That's easier said than done. How you go about discovering those wants and needs to convert your prospects into buyers is a challenge every business must face. The goal is to target a segment or even segments with a unique value proposition that will deliver the best return on your investment. It is not easy. So why bother at all? Those that do can give themselves a competitive advantage. For more than 5 decades, market segmentation has demonstrated an increased effectiveness in marketing and improved response to changing customer needs. It is now more important than ever as customers change how they respond. There are new tools for data capture and management, creating new opportunities, and market segmentation can help overcome recessionary pressures. Here is an easy 4-step process for segmenting your target market. First, identify the want or need your product or service addresses. Second, determine a niche that share a similar want or need. Third, create a customer profile. And last, research and validate the marketing opportunity. Let's look at the first one. Identify the want or need your product or service addresses. Most purchase decisions are based on wants. Needs are food, water, shelter, and clothing. Those things that we need to live. Water may be a need, but the difference between Aquafina, Dasani, Poland Spring, and Nestle's Pure Life are all preferences based on wants. Second, determine the niche segments of buyers who share a similar want or need for your product and will likely respond to a similar market action. For example, if someone needs a heavy-duty truck to pull a horse trailer, they will likely need an F-250 or F-350 and not the lightweight F-150. Although anyone at least 16 years old with a driver's license could get behind the wheel of an F-250, horse owners would be a market segment because they have a unique want or need. Once you have identified a target market segment, the next step is to create a profile. There are usually 5 distinct profiling techniques: geographic, demographic, psychographic, behavioral, and the decision rule of the target customer. Let's look first at the geographic profile. This includes states, regions, cities, and neighborhoods that may have very different wants and needs. For example, brands target hot, spicy foods in the southwest of the United States differently than they do in other parts. They may offer a milder version of their foods in the Northeast. Demographic profile. This includes age, gender, income, occupation, education levels, religion, and a customer's life stage, which often determine different wants and needs. It is no coincidence that the nightly news broadcasts often include commercials for prescription drugs and retirement planning. That is because the median age of viewers is between 60 and 66, according to a 2018 Nielsen survey. Millennials who have less need for prescription drugs and retirement planning are not watching the evening news on TV. Psychographic profile. This is a combination of psychological and demographic profiling which yields differences in lifestyle, personality, attitudes, and social class that often drive purchase decisions. For example, risk takers are often attracted to extreme sports and travel, while extroverts tend to prefer more conspicuous clothing purchases. Ghirardelli chocolate targets successful upper-income women who want to reward themselves at the end of a busy day with their premium chocolates. To help differentiate their brand, they even position their chocolates on the ends of retail aisles with wood veneer shelving, away from the Snickers, Hershey bars, and other low-priced chocolates. Let's look next at behavioral profile. Our attitudes and past buying behavior tends to dictate future decisions. For example, one high-end dog walking client screens prospects by asking them about the type of dog food they feed. Owners who feed premium dog food tend to be better clients. Common behavioral factors to consider are how often consumers use a product or make a purchase. For example, frequent business travelers are more concerned about getting to their destinations quickly than they are about price. Another factor includes whether a buyer is ready to buy, or whether the person still needs more information in the purchase decision process. The decision role profile is also important. The profile should determine the role the target market plays in the decision process. For example, is the person indeed a decision maker or influencer in the purchase process? It's interesting to note 80% of household purchase decisions are made by the women in households, yet many ads still target men. Thankfully, this is beginning to change as you see more women and couples in car ads. The final step in the segmenting process is to research and validate the market opportunities. You can use primary data that is not publicly available, such as your own customer survey results, purchase history, and focus groups you have conducted. Or, less expensive and more readily available can be found using secondary sources such as industry research results, Nielsen research data, U.S. Census Bureau data, and surveys from local, state, and federal government agencies. You will want to determine the size of the market segments and whether they're growing or declining, in addition to looking at the cost of reaching those segments and whether they are compatible with your organization's goals. For many of our clients, they often have more than one segment they are targeting. However, each segment has different wants and needs and therefore require different marketing messages and often require different marketing actions. For example, several clients who train real estate investors offer in-person workshops and seminars that are usually preferred by baby boomers. However, millennials are more comfortable working online and prefer to receive their trainings digitally and in webinars. Each has different wants and needs in how they receive their trainings, so the marketing messaging and the training product is tailored for each segment. It's safe to say that half of your competitors do not segment their markets very well. McKinsey & Company found that 51% of firms surveyed did not focus on customer insights, segmentation, or targeting. In a separate survey, Bain & Company found that half of the management teams failed to change their products to meet the demands of customers. Every prospect and every customer is unique. However, there are unifying threads in which people can be grouped together based on similarities, whether it be geographic, demographic, psychographic, or behavioral factors, or a combination of all these. To keep it simple, only segment markets if you expect to yield a higher ROI using these 4 easy steps. Identify the want or need you are addressing. Determine the niche markets who share a similar want or need. Create a customer profile, and then research and validate your market opportunities. Your goal is to generate a greater ROI using market segmentation. Hopefully you found this helpful. If you are ever interested in a free 60-minute quick start consultation to help you with your market segmentation strategies, feel free to give us a call or go to our website.